Hello, good morning. It's Adil Fazal here, market analyst at CFDs.com, bringing you a review of the European markets. As always, this video is being brought to you courtesy of CFDs.com. Be sure to visit the website to certainly take advantage of the potential bonus offer. Alternatively, you can visit the educational site www.cfds.education to certainly learn more. Okay, in terms of the chronological events that have occurred in the last 12 hours, 24 hours in terms of the global markets, we've had the Asian markets down overnight. In terms of a risk-off mode as the yen certainly appreciates. We also have the Chinese renminbi set lower as well, so that's certainly weakened, and so a stronger yen, a weaker renminbi certainly triggered a risk-off mood in Asia. The Shanghai down 0.8% and the Nikkei down 0.4%. So a risk-off tone there, okay, in terms of the Asian markets. The US market certainly held resistance yesterday. If you bring up the chart of the Nasdaq with regards to Fitbit, we had Fitbit shares diving over after hours by 16% as they missed revenue and guidance. And the 60-minute chart certainly seems set to close that potential gap at 4160 below. So certainly a risk-off tone in the US markets. Now the S&P 500 certainly held on to this key resistance zone at 1947. It has an unfilled gap at 1918, so certainly make yourself aware of that. Okay. In the European session thus far, we've had the German GDP numbers this morning and the IFO data, and all signalling a potential risk-off tone. The main analysis thus far with regards to German data. German business sentiment falls as turmoil in China so concern. Fell for a third month in a sign that companies in Europe's largest economy are growing more concerned as slowing global growth for world's financial markets as exports fall. Although imports certainly picked up, government spending certainly declining, consumption certainly okay as the GDP came in line. Dropped to IFO's Institute Business Climate Index, dropped from 105 to 105 in February from 107. China's economy weighing on global trade, etc., etc. So certainly very bearish. Now we've also had Standard Chartered posting a loss quite substantially. Actually, excluding one item, pre-tax profit was 830 for me. That fell short of the average for a profit of 1.37. And along with the BHP Billiton as well, with regards to cutting its dividend, etc. We've also had other companies reporting negative as well. We've had Wood Group, Drax, Ladbrokes. So certainly not looking good in the European session. Yesterday the markets were saved due to oil. Today the oil price certainly has given back the gains. Now, if I bring up a chart of crude oil, you can see we held that resistance which I explained yesterday. You had this key diagonal or horizontal resistance. Also, obviously, you had gap fill above as well. And it certainly seems to be the case that with the oil glut obviously outstanding, it certainly does remain bearish for the price of oil. Okay, so certainly take that into consideration when trading oil. 60-minute chart, you can see that we are holding that resistance zone. We have support down in the region of 31, and it will be interesting to see how the markets react down there. Okay, but if you do move higher, you are looking at gap fill resistance at 34. And it certainly seems like we have some sort of H&S formation brewing as well. Okay, so certainly weak from that perspective. So Standard Chartered results certainly weak. BHP Billiton results weak as well this morning. And obviously exports down in the German economy certainly doesn't bode well. With regards to the Euro USD, this is something that we need to take into consideration as well. If I bring up the chart of the Euro USD, we are now approaching into support. So this key zone here on the Euro USD at 1.09 190980, and from this 1.1040 zone, this zone will act as potential support for the Euro USD. It is coming into the 61 to 75%, and this may well signal the risk aversion trade. So a rally in the euro triggering the European markets to certainly fall. If I bring up the chart of the euro bonds, just give you an example or give you an insight here with regards to the bonds. Okay, the bonds are now coming into resistance on the 10 minutes chart. 60-minute chart, we already know we are into resistance. There is resistance at 166. If we do push higher, we are currently at 165.5. The 4-hour chart certainly depicts the fact that the bonds certainly are into resistance, and as we all know, when the bonds move lower, euro moves higher, and a higher euro is bearish for global equity markets. Okay, so it certainly is signaling a risk aversion trade. Now, the other factor as well with regards to the Chinese renminbi being marked down overnight You can see the daily chart certainly has a topping tail, okay, and you have multiple unfilled gaps below. So moving in the Chinese renminbi lower is actually risk off for global markets, okay, and you are going to see risk aversion trade kick in with regards to global markets. Now the Shanghai, you can see here now a bearish candle close on the Shanghai certainly remains weak, and this series of lower lows and lower highs remains intact. So we shall see exactly how the Shanghai reacts. Okay, now this is going to be important as to the potential next move in the marketplace. Okay, right, the Nikkei as well certainly still remains weak, and we have this unfilled gap below, so certainly all eyes on the Nikkei. Now the yen is an important chart here as well. This is one of the reasons what I overlooked yesterday with regards to the potential rally in global markets. We had a double top in the yen, okay, so a double top in the yen obviously caused the markets to embrace risk, and primarily due to the Aussie and the Kiwi certainly staging a staggering or impressive move higher. So that certainly needs to be taken into consideration. Okay, now let's bring up the indices now with regards to the markets. Now the Euro Stoxx certainly has closed the gap at 29.34, which is quite impressive. I actually shorted the market again I shorted the morning at 29.10, closed at 2900, and shorted again at 29.15, and the market certainly is against me at this moment. It's currently 15 points against me, so quite an impressive thrust. I didn't expect that gap to close, especially with the Asian market so weak, but again, I've been proven wrong as with yesterday's analysis. I did expect to pull back first before the rally, but we certainly got the rally in advance, so which is quite interesting. Okay, so with regards to the Euro Stoxx now, your potential support or key support will be at 2900, and it certainly is acting very bullish, the price action on here. I did expect the gap fill to close at 28.70 given the fact that Asian markets are down overnight. That hasn't been the case, with the euro dropping now to 1.0995, which is certainly helping the QE trade. Okay, so that certainly is something to consider. Now you do have this potential bull flag formation, although it has been negated with this bottoming tail at the 200 MA. Like I said, you have this gap fill below, and you have the diagonal trend line that certainly needs to come into play. So we shall see exactly how this market reacts. Okay, so again, it's going to be interesting. For now, you have this horizontal resistance at the 29.30 zone to expected to hold. If that fails to hold, then you are looking at 29.57 as the next potential resistance for the Euro Stoxx. Okay, so interesting scenario at this current juncture. Okay, now the daily chart is debates on whether or not we can break out here. Either it's a bull flag, okay, which has obviously broken out of this bearish channel. So if I take the pivot high here, we connect it across, you can see that we obviously have broken out, and whether or not this is going to be a sustained breakout. Now we are still below the fib 75%, and we do have an unfilled gap left below, so the probability of that gap closing below is certainly higher from my perspective, and especially given the fact that we've had BHP and BHP Billiton. Also we've had Asian markets down overnight, okay, and given the fact that we've had other companies earnings certainly negative as well. IFO data negative, German GDP overall net negative, given the fact that exports are down. You are looking at a weaker markets. Okay, now looking at the German DAX, let's bring up the DAX, given the fact that we are discussing the DAX. The DAX hasn't closed a gap, which is quite interesting now, especially with Standard Chartered weighing so heavily. The DAX certainly hasn't closed a gap. It's held previous support equals resistance, and it certainly remains vulnerable to closing that gap below. So the gap below is at 9380, and we have the 200 MA at the 9450 zone. So again, it will be very interesting to see how the German DAX reacts. Okay, so again, you have an unfilled gap above and an unfilled gap below. Which gap will close first? Given the fact that Fitbit certainly will raise concerns in the given the fact that it missed earnings and revenue guidance, etc., it will certainly raise concerns with regards to social media valuations, etc., and that will certainly cause a risk-off tone in the markets, especially given the Apple versus government saga ongoing, again with regards to privacy issues and the ability of China's, Apple's Chinese growth wagon certainly to be vulnerable, especially with regards to the US government attempting or forcing Apple into a corner with regards to privacy intrusion. So again, that's going to be another issue, and that should keep the Nasdaq at bay. Okay, so in terms of European indices, again, IFO data, German data weak overall. Therefore, we'll keep the German DAX at bay as well. Bringing up the French CAC. The French CAC certainly has closed the gap very impressively. It certainly remains bullish from that perspective or from that juncture. and it should be interesting going forward. Okay, the 10-minute chart is showing resistance. Okay, and that gap has closed, which is pretty impressive. The French CAC itself, you do have an unfilled gap below, which really needs to be closed before we attempt to mount any rally on the upside. So you have an unfilled gap at 4,400. That certainly remains in target or in range, and that certainly needs to be looked at as well. But bear in mind, the euro is into support, bonds are into resistance, and given the fact that we've had weaker data and a weaker Asian session overnight, it certainly will signal and trigger a risk of aversion. Going over to the FTSE 100 now, you are holding that key diagonal trend line. We have Brexit concerns at the forefront, and that certainly will keep the FTSE at bay. Add in BHP Billiton and Standard Chartered, and those two certainly will exert even more bearish influence. Now again, you have this diagonal expanding rising wedge, and as we all know, a rising expanding wedge is always considered to be bearish and one that needs to exercise some caution. Now you currently have a bear flag formation after breaking out of this rising expanding wedge pattern once again. I mean, you had this breakout, it was a fake out, and the market's reversed in the opposite direction. We've hit a pivot low this morning at 5978, and we are expected to potentially retest those lows, and that gap fill at 5940 certainly remains in contention, especially given the fact that oil markets certainly are coming off the highs and certainly is under immense pressure. Okay, so I think that's a wrap with regards to the market. Now, one more factor I do need to add in here as well is the Aussie and the Kiwi charts. Now, the daily charts, the Aussie and Kiwi are coming into resistance, which usually generally signifies that the FTSE is coming into resistance because they move in tandem. Looking at the Aussie, you can see there, looking at the Kiwi as well, you can clearly see that we are into resistance. So, Aussie and Kiwi into resistance equals FTSE into resistance, and generally signals a risk aversion trade globally, okay? And that certainly needs to be observed as well. Also, with regards to copper, you can clearly see that we're into resistance on the daily chart. Oil, I've shown you, is already into resistance and certainly remains weak, especially with regards to the ongoing oil glut. And gold certainly is holding that weekly chart resistance, going to a daily, and you can see that we certainly look exhausted from that perspective as well. So, given the fact that we've had weaker data overall this morning and Asian markets weaker overnight, you are looking at a risk aversion trade, especially with the Chinese renminbi being marked down. Again, markets will dictate. Markets are king. This is just my analysis. Always do your own analysis. But I am looking at and expecting weakness with that FTSE targeting that 5940 zone below. Okay, that's a market wrap. Be sure to visit cfds.com for your trading needs. Goodbye now.